Hi, thank you for joining us for this weekly market update at Morton Brown Family Wealth. I'm Katie Brown and I have Cody Demmel here with me today. How are you, Cody?
Good. How are you?
Good, good. So we have a few things that we want to go over today. First, we want to discuss the strong correlation between the market cap size of businesses and their returns this year. Then we want to touch on growth stocks versus value stocks and how historically we see periods of time where there's a change in leadership. And then we want to talk about socially responsible investing and kind of the status of that and how that's holding up compared to their peers. Finally, a little bit about education and what the landscape looks like for our economy opening up, but also the potential impact of international students under the new laws, how that may impact colleges and their financial ability to keep things running smoothly. So, Cody, why don't you kick us off? You pulled up a couple of great charts and have some really good insight on the market cap size of companies. Love to take a look at that.
So this first chart breaks down the 500 companies in the S&P 500 by their size. So the top 10, the average market cap is right around 850 billion. And this is as of last week, so the returns are a little lower than what they currently are because we have had a little rally since this. But the year-to-date returns on the 10 largest companies is almost positive 10%. And then you can see for the next pretty much 490 companies, the year-to-date return on average is negative. Obviously, there's some companies that have outperformed, but on average, the year-to-date, besides the top 10 companies, is a negative return. I also thought it was interesting, the PE ratio, so the price per earnings that investors are willing to pay per each company. The top 10, you can see the PE is definitely a lot larger than the other companies in the S&P 500.
That almost shows a lack of confidence.
Yep, exactly.
Over the smaller companies and their ability to continue to thrive in this environment. Yeah, and it is fascinating because you always expect to see winners and losers, but to have them so closely correlated to the size of the company is fascinating.
Yep. I think it definitely shows what you just said, that the confidence that investors have in the largest companies compared to some of the smaller ones and value companies. Mm-hmm. And speaking of that, so the next chart we have is growth versus value charts. So we have three different charts. The top left one is from 1995 till 2000. So the purple line is growth. So you can see the vast outperformance compared to the value in the orange. And then the bottom left chart is from 2000 to 2007. The orange is the value. So you can see the vast outperformance in value positions compared to growth. And then from 2007 till now, you can see the vast outperformance in growth companies, the purple line, compared to value, the orange line.
Yeah, that's that change in leadership. Once again, as we said, is really interesting because it is really easy to go back and reflect upon the most recent thing with the growth outperforming so strongly. And the growth has been performing very well again this year too,
Yep.
Through some of this rebound here. But we have to recognize that value has their time in the sun as well, and for long periods of time, and often coming off of more volatile markets.
Yep, exactly. Yeah, it's interesting to see how the leadership almost changes every time we have a big pullback in the market, like we did in 2000. So in 2000 to 2007, you had the vast outperformance in value. And then when we had the pullback in 08, 09, we've had the vast outperformance in growth. So it'll be interesting to see how this changes, if it changes going forward. But this is, again, why we want to be diversified throughout our portfolios.
So another area that there's a lot of talk around is socially responsible investing. And this has become a greater trend, if you want to call it that, over the past decade plus. And there's a lot more demand for individuals, consumers seeking companies that follow kind of ESG guidelines, so that are focused on environmental, social governance. companies that have strong governance and are socially responsible. And I think initially when this started to kind of in the early 2000s and we started seeing more investment opportunities coming out that are focused in these socially responsible areas, the cost of investing was really high and it impacted the return. So that the cost of going in and doing the due diligence and kind of peeking behind the curtain of the companies to see, how are they running the company? What are they investing in? Really impacted the performance. But this is an area that we've seen along with the rest of the industry where there's been a lot of fee compression and a lot of ways to bring in a streamlined process. And it's nice to go back and reflect upon how some of these companies have been performing, especially coming off of some of the volatility of this year, and to see that a lot of the socially responsible investing options that are out there are right in line with the overall traditional asset allocation funds available.
Yeah.
Yeah, I know that's something that we get inquiries about more and more often. Are there opportunities to align investments with personal beliefs? So it's nice to see more options there. So finally, one other area that we wanted to touch on today is in the world of education and kind of both sides of education, primary education and also secondary at the college, university level of education. So looking at primary education, and I know we've brought this up before, how that will be a large contributor to how quickly and smoothly the economy can open back up. The relationship between how quickly and smoothly the schools open up and can provide that on-site care and education for our children to allow the parents to get back to a fully functioning work environment. Obviously, we want our children to be well educated, but we also need a safe place for them to go to throughout the day. And we need help in providing that guidance. And there's an article in CNBC that talks specifically about that said, our economy will open up when we can get kids back in school. And I think that is an important thing to figure out. And as of July, 95% of the local public school, or 95% of public schools across the country, had indicated that they still don't know what their opening plans are going to be. Everybody's trying to figure it out. And I know most of the schools by us have a lot of different contingency plans, a lot of hybrid plans of maybe part-time in, part-time virtual, and so it's a challenging landscape, not just for our area, but really across the entire country. And that has to be figured out in order for the economy to fully open up.
Yep. I thought it was also interesting in that same article, they started talking about the retail spending for back to school. And it's one of the largest periods of spending in the year. And that last year, over $80 billion were spent for back to school supplies, and how that could change if students aren't going actually back into the school districts. So.
Yeah, that's a good point. It's not just about getting our kids off to school. It's about the consumer spending and getting back to normal environment of spending money and supporting companies. So, and then on the higher ed side, this was, once again, there was an article in CNBC that talked about the impact of international students and laws around their ability to be here in the United States. In order for them to go to school here, they have to actually physically go into a classroom. Whereas if it's going to be all virtual learning, then they need to return to their countries for the virtual learning. So we have schools like Harvard and Princeton chimed into the article. They're planning on providing online platforms for education. And so if it's not required that the students are in the classroom, that could have a significant impact on the students' ability to stay in the United States and a significant impact on their willingness to even pay for the college if they can't come here and have the experience. I think one of the shocking pieces from the article was the amount of revenue that international students bring to U.S. colleges was $41 billion. And many colleges need that revenue because those international students are often paying full ticket price.
I thought one of the interesting things that they were talking about is, like you discussed, is most of the international students are paying the full price that you see for the students. So if they're not coming in and paying that full price, it'll be interesting to see how much the college are actually able to help with financial aid if they're not getting the full price from other students. I thought another interesting stat in the article was over 50% of the colleges that were surveyed thought they would see a decrease of more than 5% of their first year enrollments this year with everything going on.
Mm-hmm. So just like the rest of us are trying to figure out how things open back up, a lot of colleges are having similar struggles too. And this is definitely higher education in general is something that we're keeping a close eye on. I mean, we've all seen a rapid increase in tuition costs, and we'll be curious to see, how does something like this impact that tuition costs and the college's ability to continue to grow and run profitably.
Yeah.
So, thank you so much for tuning in today. We really appreciate it. And if you have any questions or anything that you would like us to discuss during any of these market updates, please feel free to reach out to us. We'd love to hear from you. Hope you have a great week. Take care.